Higher than expected inflation figures trigger talks of interest rate hikes in Australia. Star Entertainment gets a star CEO and is paying big for him. And one of the country's most iconic landmarks is up for sale. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Thursday, the 27th of June, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, inflation for the 12 months to the end of May jumped to 4%, way above the Reserve Bank's target band, pushing out expectations of an interest rate cut this year and even triggering discussions of a hike in rates.
Yes, bad way to end the financial year, don't you reckon?
Oh, it is actually. It's certainly not what we were hoping for.
Certainly those hoping for a reduction in mortgage and credit card rates will be disappointed with the 0.4 percentage point increase last month. The Australian Bureau of Statistics said there were a number of significant contributors to the annual rise, the highest in 6 months. Housing was one, with rents up 7.2% over the year. Electricity was another, up 6.5%. The jump in energy costs would have been much more, but for government rebates. Fruit and vegetable prices also jumped, with increases in grapes, strawberries, blueberries, tomatoes and capsicums at their highest level in more than a year. The cost of holidays also contributed to the final figure. Petrol prices across the year were up 9%, though the good news is they were lower in the month of May. That's something, I suppose. The Bureau said if you remove the more volatile items from the CPI reading, underlying inflation for the 12 months was 4% lower than the 4.1% the month earlier. It's kind of good news. Only thing is, the Reserve Bank's got a favourite measure, the trimmed mean inflation. It was up 4.4%. No good news there.
All right, so what was the response then from markets and from economists? What are they now saying about interest rates?
Ahead of the release, the overwhelming consensus was that the next move in interest rates was down, and that will happen either late this year or early next year. Yesterday's figures support the view that rate cuts will at least be pushed out into 2025 at best. Immediately after the 11:30am announcement, bond markets priced in more than a 50% chance of a rate hike this year, probably by September. There are now a few market economists around the place, Deutsche, for example, expecting another rate rise. The Reserve Bank will have the quarterly inflation data out at the end of July next month. That'll come out before its August board meeting. That will be very, very important. A rate hike can't totally be ruled out anymore. Now, there was another interesting aside yesterday. The Reserve Bank Assistant Governor Chris Kent was talking. It was ahead of the inflation figures. He suggested the neutral cash rate is 3.5%. That's a rate where the central bank estimates it is neither adding nor subtracting from growth. The cash rate currently is 4.35%, so it means the bank would have to cut rates by 0.85 percentage points to get to neutral. Now, there's lots of uncertainty around those estimates, but it certainly suggests that the Reserve Bank thinks that interest rates now truly have put the brakes on the economy.
Sean, on that, we received a question from a listener via Instagram. His name is Ivan, and it's always great to get questions because I ask you a lot of questions without notice, and sometimes I like to outsource that to other people. And Ivan asked a very interesting question. He says, look, I don't know if you take questions, but I'm curious. Yes, Ivan, we certainly do, so feel free to send others through. At what point, he says, do we start to consider that maybe interest rates aren't having any ongoing effect on inflation at the moment, since it continues to remain stubbornly high for a whole host of reasons that seem to have nothing to do anymore with household spending?
Yeah, I mean, there's sort of some truth in that. Some of the services inflation, so insurance rates, really high at the moment. Now, that's not just about interest rates. It's about a bunch of other things, including global warming and stuff like that. So there's sort of a sense of truth in it. I think generally, though, rates do actually affect household spending. We're seeing that in the last week or so. Brands like Mosaic Brands, KMD, owner of Kathmandu, a bunch, Cettire, the online luxury brand, they're saying that people aren't spending as much and they're lowering their earnings forecasts as a result. When people don't spend as much at a Kathmandu store, for example, Kathmandu don't employ as many people. Those people don't have a job. Therefore, they end up spending less and prices definitely come down. So the transmission mechanism works. It just takes some time. When the Reserve Bank was last talking after its last board meeting, it talked about the tight labour market. That's kind of what it was referring to. So I mean, there's kind of a sense there are some things that interest rates probably just don't affect that much. So Ivan's right. But more generally, I think the market mechanism does work.
So broadly speaking, though, interest rates have been the thing that's done the heavy lifting here to bring inflation back down.
Absolutely. There are two main forms of policy to do it: monetary policy, which is interest rates, and fiscal policy, which is the government. The government and the state governments have had expansionary budgets, right? So they're not helping. Monetary policy, if we hadn't had interest rates at 4.35%, let's say we had them at 2%, we would have much, much higher inflation today.
Okay. All right. Good question, Ivan. Thank you for sending it in. And if you'd like to share your own question for me to surprise Sean with, just get in touch via
Please
Instagram
don't.
or Facebook or LinkedIn. Yes, please do. Ignore Sean and send your questions. I will be very grateful for them. Local markets, how did they perform yesterday?
Well, they're doing poorly ahead of the inflation number and then dropped even further to the low for the day. By the close, the S&P ASX 200 had recovered some ground. It finished down 0.7% to 7,783 points. The interest rate sensitive sectors were hit hardest, led lower by real estate stocks. Scentre Group fell 3%. Goodman Group was down nearly 2%. The surprise hike in inflation certainly hit the consumer discretionary stocks. Collins Foods, owner of KFC and Taco Bell, fell nearly 9%. Harvey Norman was off 8%. Eagers Automotive dropped nearly 5%. Market leader JB Hi-Fi ended down more than 3%. The banks ended lower with the Commonwealth Bank and ANZ both off 1.5%. Wesfarmers, QBE, South 32, they all fell more than 2%. Plenty of stocks going backwards. I suppose the flip side, the energy and tech stocks were probably the ones that did best. WiseTech Global was the best of the large caps.
All right, what's happening on international markets?
Oil prices have risen again, even though figures show a rising stockpile in the US. Gold's fallen. It's heading back towards $2,300 an ounce. Still pretty high by historical standards. Bitcoin has bounced somewhat. It's heading back towards $62,000 a unit. The Aussie dollar appreciated against the US dollar on the back of the inflation numbers yesterday. It's almost at 67 US cents. Michael, one sector that I've just always kept an eye on ever since I did renovations, the lumber sector. I know you're a big fan of lumber prices. Well, they're at their lowest level in more than a year, almost back to pre-COVID levels. I, of course, built or renovated at a time when lumber prices were at record highs.
Of course you would. You're Sean Aylmer. You seem to time these things spectacularly well.
Yeah. But basically a slow construction market in the US has knocked the lumber market around a bit. Prices down about 11% over the year. There you go. Do you know where the biggest lumber producers are? Question without notice, Michael.
You've asked me this one before, remember? And I embarrassed myself horribly by suggesting that it was, I shouldn't do it again now, but I suggested that it should be Brazil because that's where the Amazon is and there's plenty of deforestation
going on
in the rainforest. And so that's why I wish you hadn't asked me and I shouldn't have answered you just then. But where is it?
China and the US are the biggest producers, but in terms of exporters, China, Canada, and Poland. There you go.
Oh, there you go. And not Brazil.
Not Brazil. No.
After the show, Sean, quick mention of the interview you have coming up today. You are speaking with Andrew Gregory, who is the head of financial advice and education at UniSuper, who is a supporter of this podcast.
Yes, I talked to Andrew all about the financial planning industry, the role of financial planners, and ways that are making it more affordable for people like you and I to actually access financial planners and get some great advice. We are big fans of financial planners on this show. UniSuper, as a supporter of the podcast, big fan of financial advisors as well. And what Andrew explains is that not every advisor is the same. So, you can get some general advice from one type. It might cost more to get specific advice, but we go through that whole process where super funds are up to with it, and also the government's quality of advice review and what that means for advice. Plenty in it.
Yeah, and especially as we approach the end of the financial year rapidly, it's a very good time to be listening to this because Andrew does have a lot of very worthwhile things, not just for punters like you and me, Sean, but for small businesses and the like as well. We will be back in a moment with the rest of the day's business news. Sean, Julian Assange is a free man and arrived in Australia last night after pleading guilty in a US courtroom to publishing military secrets.
It ends a 14-year saga for the founder of WikiLeaks, one that included 7 years in the Ecuadorian embassy in London and 5 years in a maximum security prison in the UK. United States Ambassador to Australia, Caroline Kennedy, thanked the Australian government for its cooperation in bringing Mr. Assange's difficult legal saga to a resolution. Prime Minister Anthony Albanese said the case dragged on for too long and the breakthrough in US courts was a result of considered, patient work. He said regardless of people's views on Mr. Assange's activities, his case had dragged on for too long and there was nothing to be gained from his continued incarceration. Now, Michael, as you know, in our newsletter, I talk about this particular issue and it really has me flummoxed, shall we say.
Yeah, absolutely. I think, and your reference to the New York Times as well, and the motto of the New York Times in yesterday's newsletter, I thought was really, really interesting. And if you haven't signed up for the newsletter, head along to fearandgreed.com.au. It comes out every Wednesday morning, so you are just a wee bit late for this week's edition, but you will be very, very early for next week's. And who doesn't like being early?
That's true. Yeah. Sign up now.
Indeed. Now, Sean, the former boss of Lendlease and Crown Resorts, has signed up to be chief executive of Star Entertainment, and he could be paid very handsomely for doing so.
Yeah, Steve McCann will receive a sign-on bonus of $2.5 million and could earn 4 times that if he can overhaul the company's culture and immediately implement a remediation program for the gaming group. In a poor market, Star's share price was flat. Mr. McCann ran Crown from June 2021 and is considered an architect of the deal with Blackstone, which ended up buying Crown for $8.9 billion. He was previously chief executive of Lendlease, a role he held for nearly 13 years. Now, his pay packet is very, very, very large for a $1.5 billion company. But the Sydney-based gaming group is, shall we say, desperate. Its earnings are poor. Premium gamblers are staying away. We found that out this week. And it faces the prospect of running its casinos with continued hands-on oversight from regulators. That would actually be the good case scenario for Star Entertainment. Anyway, Steve McCann, shareholders think, is a man for the job. Good luck to him.
Yeah, it seems that they think that if anyone can do it, he can.
Nice, Michael. I got it.
Did you like that?
Yeah.
I didn't know whether I should be like, he McCann?
Yeah.
Maybe I should have done that. Let me try that one more time.
Righto.
If anyone can, he McCann. There we go.
Nice.
I don't know what's any better the second time. Let's move on.
Sure.
Australians are leaving the mortgage market in unusually large numbers, presumably due to ongoing high interest rates, while those with mortgages, Sean, are increasingly taking advantage of offset accounts.
That's the findings of the Reserve Bank, which has been looking at the mortgage discharge rate, which measures people either paying off their homes or getting out of the market. It's running at about $40 billion per quarter. The amount of new loans is running about $80 billion per quarter. So there's this thing called the ratio of discharge to new loans, 40 to 80, 50%. That's at its highest level since at least 2009. The Reserve Bank says, put that all together, the figures suggest that highly leveraged investors and homeowners are selling and, on average, being replaced by buyers with a larger deposit.
Sean, a massive day in the media yesterday. Seven West Media has announced big changes at the top of the organisation as it struggles to turn around its ailing profits.
Yeah, sure has. The head of sales, Kurt Burnett, the marketing chief, Melissa Hopkins, and the sports chief, Lewis Martin, have all left the company. It follows the departures of Chief Executive Officer James Warburton, legal chief Bruce McWilliam, and news chief Craig McPherson 2 months ago. Basically, everyone is out, except for former Chief Financial Officer, now CEO, Jeff Howard. Seven, along with competitor Nine Entertainment, is struggling with lower free-to-air audiences and a cyclical downturn in ad spend. Unlike Nine, however, which of course owns Stan, Seven doesn't have a streaming service to rely upon.
Now, I mentioned this next one at the top of the show. Sean, Luna Park in North Sydney, an iconic landmark for the Emerald City, is up for sale for at least $70 million.
Yes, this is what you call prime real estate, fronting the water at Kirribilli, looking across towards the Harbour Bridge, the Opera House, the city. The amusement park was opened in 1935. It's had many ups and downs since then, the worst, of course, being a fire on the Ghost train ride back in 1979. 7 people were killed then. The site is heritage listed and its status as an amusement park is protected by government legislation. So you can't just buy it, knock it down and build apartments. That ain't going to work. Luna Park has currently 17 amusement rides, the Coney Island building, 7,000 square metres of building floor space, and a 389 space car park. Brookfield, the Canadian manager, it owns Luna Park. It reckons it spent about $40 million over the past 4 years on it to improve the site, to get it ready for sale. Anyway, for $70 million plus, you can have your own landmark in Sydney.
Sean, there's long been talk about Disney coming down under and having a very own Disneyland or Disney World.
Mm-hmm.
You know what I would like to see? You can probably guess
Here we
this
go.
by now.
Go on.
Can't you just imagine the big kind of Luna Park face with the teeth, then a big set of Mickey Mouse ears on top? It would be
That's
iconic.
Very funny. That's good. Yeah, it would be iconic.
Yeah.
It would absolutely be iconic.
I don't think it's going to happen.
I don't think it is either. But I'd love to see it.
International news. European Union regulators have charged Microsoft with breaking antitrust rules by bundling its Teams video conferencing and collaboration software with a suite of other productivity tools, giving it an unfair advantage over rivals.
Now, anything to do with Teams that's bad, I'm all for. I'm sorry, Microsoft. I'm sure it's great software, but
Are you just triggered by the noise of kind of a Teams call?
What I think it is that I have 4 teams. So I'm in a bunch of different businesses, and I'm always in the wrong one trying to get to I might be in one of my content, I've logged on as my content business whilst trying to talk to you on Fear and Greed, and it causes me no end of hassle.
Yeah, and then kind of combined with your natural tech challenges, like it's just never
That's right.
Well,
that's right. Put it all together.
Yeah.
Oh my gosh. Anyway, regulators said Microsoft's packaging of Teams with other well-established software tools in Office 365 and Microsoft 365 includes stuff like Word, Excel, PowerPoint, Outlook, amounts to an illegal abuse of market dominance that rival companies like Zoom and Slack can't match, according to a report in the New York Times. Regulators said businesses essentially had little choice but to take Teams if they wanted other software made by Microsoft. The charges are the latest in a barrage of announcements by the European Union in recent months in its effort to crack down on the world's largest tech platforms. Of course, earlier in the week, regulators accused Apple of violating competition rules because of its App Store policies. Amazon, Google, Meta, TikTok, and X are also facing investigations related to their business practices and services. Microsoft's now being caught up. It really is European regulators v. the tech world.
Sean, the world is heading for food wars as geopolitical tensions and climate change push countries into conflict over waning supplies. This is according to one of the world's largest agricultural commodity traders.
Sonny Verghese, the boss of Olam Group, one of the world's biggest agricultural trading houses, said many wars have been fought over oil, but there will be bigger wars over food and water. He warned that trade barriers imposed by governments seeking to shore up domestic food stocks have exacerbated food inflation. Now, this is all in a report in the Financial Times. A proliferation of non-tariff trade barriers in 2022, Verghese estimates about 1,266 trade barriers from 154 countries, had created an exaggerated demand-supply imbalance. Wealthier countries were building on surpluses of strategic commodities, leading to exaggerated demand and, in turn, higher prices.
Sean, last one. German car-making giant Volkswagen will invest up to $5 billion in a joint venture with US-based EV maker Rivian.
Rivian is a rival to Tesla, and its share price jumped almost 50% after the announcement. The two companies have agreed to share technology. Founded in 2009, Rivian has not yet made a quarterly profit, according to a report on the BBC. Volkswagen has come under pressure itself from rivals like Tesla and China's BYD as it tries to make the shift from fossil fuel-powered vehicles to electric vehicles. Separately this week, Tesla said it would recall most of its 11,000 Cybertrucks sold in the US over issues with their windscreen wipers and exterior trim.
Hang on. Sorry. You've seen the Cybertrucks. They are a unit of a vehicle.
They are a unit.
They are. Yep. And haven't they got like kind of almost bulletproof glass? Remember, they can throw things at it and it doesn't break. Yet they're being recalled for the windscreen wipers?
Yeah, very important. If it's raining, Michael, no one's laughing at that. Come
I
on.
know, but oh, goodness me. All right. Okay, up next is the Fear and Greed Daily Interview. You're speaking today with Andrew Gregory, Head of Financial Advice and Education at UniSuper.
All about the role of financial advisors and how you can access financial advice without having to go through a very, very expensive process. We also talk a lot about the future of financial advice. Great chat.
Yeah, it is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And don't forget to check out the new episode of How Do They Afford That, which came out yesterday, all about whether it is worth joining an investor club. Should you kind of join up with other people and pool your money and talk about what companies to invest in, all that kind of thing. It is a really good one. You'll find that wherever you listen to podcasts. I'll put a link in today's show notes as well. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 27th of June, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.